Good evening, everyone. It is 9:02 p.m. Tuesday, April 20th. Sorry, I'm a little bit late. Only 2 minutes. You can't hold that against me too much. Anyway, here we are at Dividend Stock Talk. Let me see if we can just go back to where we are. Let's bring that down. There we are. Dividend Stock Talk with James Gardino, your host. What we do here is we talk about dividend stocks and investing in dividend stocks. The reason why I like dividend stocks is because they're a little bit more stable than the other ones. The other ones, those are the privately held companies or the publicly held companies that don't share their profits. A dividend basically is a portion of the company's profit that they pass along to the investors. If you buy the dividend stock, you are entitled to a dividend only if you have it in your possession within a certain time frame. Basically, you have to be the registered owner. The registered owner is the person who buys it and owns it a minimum of 2 days. You have to own it for a minimum of 2 days to be the registered owner. And if you do that before the date of record, then you are entitled to the dividend. So what we're going to do here is we're going to talk about basically what we have bought in the past couple of days and what's on the agenda for tomorrow, because tomorrow is Friday and weekly options expire on Friday. What does that mean to you people who don't do options? It doesn't mean anything. Okay, if you don't invest with options, two things. Number one, you're missing out on a lot of money, and it's mostly free money too. It's simple and easy to use, but people, or should I say the professionals, stockbrokers, stock analysts, financial advisors, they make it sound complicated because it kind of is complicated because it's designed that way to be complicated so that you don't understand it and you don't ask questions and you're afraid of it. They purposely do that. However, it's really not that complicated. Okay? And what I'm going to do is I'm going to show you what I've done over the past couple of days, because what I do every Thursday night, I go over what my positions are, why I bought them, where they're going, all that kind of nice, neat, fun stuff. So let's jump on in and take a look. Now, Tuesday we were online, and just before the end of the show, somebody asked me a question. Can I show you a 1% trade for the week? You know, a 1% trade. You know, a trade that I can do and make 1% for the week. I ended up showing a couple of trades. One was at 3%. The other one was at 6% for the week. So had you gotten in Wednesday morning, by Friday you'd have 3% on one, 6% on the other, and I believe 60% on the third one. And the third one I actually did. It sounds kind of funny because here I'm looking, trying to show them a 1% trade, and I end up coming up with a 60% trade. I said, whoa, I'm going to do that. And you know what? And I'm going to show it to you because it expires tomorrow at the close of business. And if I explain it to you what it is, how it works, a lot of people will probably ask, well, how come you didn't put more money into it? Well, because I can't. Because you ever remember when you do certain trades, you have to have backup. You have to have an exit plan. So the exit plan for some strategies is you could do, and you never put all your money into one trade anyway. There's that cough again. Oh, I'm trying to get rid of that thing since December. Can you believe that? We're in April 20th, the third week of April. Okay? And I still get this cough. It won't go away. Anyway, where was I? Yeah, so I'm going to show you that one trade. I was looking to show this one person how to get a 1% trade for the week, and it ended up being a 60% trade for me for 3 days. All right, we're going to get to that a little bit later, but first, let's jump on into the the dividend plays that we have. And here we go. All right. We're still into BMO. We're looking to get out at 75.96, and it's currently at 73.48. That don't make me happy. Anyway, let's put BMO in. Bank of Montreal. That's what BMO is. BMO. Bank of Montreal. Okay, Bank of Montreal is going sideways for, what was that, 7 months? In the $63 area. Right on election time, she goes from 63, jumps on up to the $74 area, goes sideways for a bit, and she trades where she is today at 73.48. Now, for us, we bought BMO at 74.10 back on the 12th. Let's just bring up this calendar. On the 12th, we got it. So most likely, it's going to have its dividend on the 26th. So we want to make sure we have like, what's that, 4 more days? Then we have to decide. So next Tuesday, I'll basically be deciding whether we want to keep it and capture the dividend, which we'll probably catch for the first week or two in May, or do we want to sell the options against it, or what we want to do. We're going to discuss that more on Tuesday, because right now, she's in a little bit of a downtrend, even though she had an update today. She's still in a little bit of a downtrend, and she had 4 more days before the EX date. Okay, so that's BMO. Okay, although we made 384 today, we're still down 372. It is what it is, people. We don't win them all. I don't win them all, so I'm not going to tell you you can win them all. The next one is CL. Put CL in there. That's Colgate-Palmolive. They've been around since the 1800s. Okay, they are a dividend king, which means they have increased their dividend payment for a minimum of 50 years. Okay, 50 years they've increased their dividend payments. How can you go wrong with a company like that? Increase the dividend. Even in 08, everything was tanking, but no, Colgate-Palmolive increased the dividend payments to their shareholders. Okay, so Colgate-Palmolive trades sideways, begins the year around 71, goes sideways for a bit. What is that, 2 months or so? Jumps up to the 74.50 area, goes another 2 months there, drops back down to 71, goes for another 2 more months, and then here you go. Remember I told you, if you've been watching these videos, I told you there's certain pivot points or certain dates you need to remember, like October 29th, or is it September 29th? 1929. Stock market crash, big day. Everybody remembers that. The dot-com bubble bursting back in 2000. In 07, 08, the financial markets falling apart. Well, here's another one. The 2016 election. Here it is right here. You're going to find that almost all the dividend stocks either spike up or drop down. But more than 3/4 of them have spiked up. Colgate-Palmolive, for some strange reason, went from 71 and dropped down to 66. Traded 66 for 1, 2, 3, almost 4 months. Jumped back up to the 73 area where she's nice and comfy, cozy. And then she's been trading there for the past 2 months. She's at 73.18 now. And we are still up 130 with Colgate-Palmolive. Now, I believe we got Colgate in the same day. Yes, we did. We got the same day as we got BMO. So that means next Tuesday we have to figure out what we're going to do with Colgate also. Are we going to keep it, jump out? Are we going to capture the dividend? Are we going to do the options? What are we going to do with Colgate? That's what we're going to figure out next. Wait a minute, Colgate. No, we got BMO and SKT last week. So Colgate, oh crap, we should be collecting a dividend on this one pretty soon. All right, let's. I am sorry, I stand corrected, or sit corrected because I am sitting. We got that on the 3rd. Okay. Ah, there you go. So we got it on the 3rd, which means 10 days. It would have been the EX date would have been the 17th. Ah, makes sense like that. Look at that. The 17th right there. The EX date, what happens after the EX date? The stock price drops. Imagine that. So, I'm going to hold on to the stock a little bit longer. I'm going to capture the dividend. I'll probably collect it tomorrow or sometime next week. We're going to probably catch some more shares on it. Then we'll adjust our selling price. That way we collect the dividend. We get to sell it for a profit, and we're out. All right, so that works for me. All right, so What are we looking at next? Macy's. So did you understand what I said? Even though the 17th was the day we should have been out, okay? The very next day is the 18th. Then they pay their dividend. Or they didn't pay the dividend. The stock went EX dividend. And then the stock drops an equal amount to the dividend price. So now she's back down here. However, we are still... let me bring that date back up again. No, not that one. Let's take a look at this one right here. Colgate's not there. That's CLX, that's Clorox. CL's not there. There it is right there. The 19th, which was yesterday. All right, so the EX was yesterday. Wow, that's strange. Anyway, so the EX for Colgate was yesterday on the 19th. Okay, today's the 20th. And tomorrow's the 21st. It's 2 days, so the 19th. And the dividend date of record is the 21st, which is Friday, which means Monday we'll be actually collecting more shares, and then Monday to Tuesday we will be either selling it, changing the price that we bought it. I mean that we're selling it for, because we're collecting the dividend on it. I mean, whether I want to collect the dividend or not, it's irrelevant because I still own it. So that means we'll collect the dividend on it, and we can change the sale price, and we can get out of it, and we're still above ground. So we get to collect the dividends, and if I sold today, collect the dividends and sell it for $120 profit, depending on what it does. So get excited about that one, because Tuesday we're going to see what we're going to do with Colgate. Colgate-Palmolive, yeah. Okay, back to where we were. Okay, I'm kind of excited about that one. Macy's, do we really want to go over Macy's again? Because we go over this one every month or every week. Okay. Macy's starts out the year at 41. Within a month, she drops down to 30. That's a 25% drop in a month. Go figure. Trade sideways for a while. Makes a peak back up to 41, the $40 area. Drops back down in a month at the 36. Goes sideways for a couple months. Jumps up to make the high of the year of 45. Just after the election. And then from there, she drops all the way down to the trading range of where she is now in the $28, $29 area. Actually, she's at 30 today. Yay! So we're only down 4,000 on Macy's. Now, we collected 21 shares the last time we paid out the dividend. And it looks like we may have to hold it again because it's quite a ways away from the target we're looking for. Where's Macy's? Okay, she's at 30. We're only looking for it to go up 10%. $3. It's really not that bad. And maybe it could. You never know. Hey, she hits 33.10. I'm out of there. I collected the dividends, collect a little bit of profit, hold on to it. I prefer not to hold on to it, but I don't want to take that $4,000 loss. Okay? I don't have to, so I'm not going to. And last, we are looking at SKT. SKT, which we got last week. Now, SKT started out the year at 36, goes sideways for a bit. And after that was that 2 months, and then she shoots on up to make the high of the year at 42. And then from 42, she drops down after a couple of months, a trading range of 33, goes sideways for about 3 or 4 months, drops back down to the trading range of 33, and where she is now, 33, 39. Now, SKT we got on the 11th. Okay, so most likely they're paying out. Their EX date's going to be the 25th. And most likely, if it's the 25th, then the date of record should be the 27th or the 28th, which means the first, second, or third will be collecting the dividends or getting rid of it, one or the other. So next Tuesday, I'll give you a better idea of what we're doing with SKT. So next Tuesday, we're going to have quite a bit to talk about for this trading account. Okay, we're done there. And as I said before, as of this moment in time, we have no big change from last week. Because last week we were up 19,000. This week we're up 19,800. No big change from last week. However, let's move on to the other trading account and see how we're doing with the options. Okay. Strange to say that since the beginning of the year, we've had anywhere between 8 to 14 positions. This is the very first week since the beginning of the year that we've only had 2 positions. Just 2. Only 2 stocks were worthy of looking at it, of doing anything. Why is that? Well, let me show you quickly. Today is the 20th, right? So the week of the 20th. Okay. Now, we like to trade our stocks that are paying their EX in 10 days. Okay, so the week of the 20th, which is this week, so 10 trading days from now is the first week of May. Okay, so here's the first week of May. Look what you got. 7, 4, 21, what was that? 6, and 1. That's hardly anything to look at. Click on this little, looks like a wheel or a cog or something. Click on that, come down to public, the N through W, the drop down table. We'll switch on over to when the drop down table come all the way down to the weeklies. And what do we got? 2 companies worthy of looking at the weekly options. Just 2. I put both into the calculator. INTC or Intel was the only thing worthy of looking at. But let's clear that filter and go back to this. Considering tomorrow is the 3rd Friday of the month, all the options expire on the 3rd Friday of the month. So not only weekly options, but monthly options. So all these companies here could have monthly options. There's no guarantee. The only way to find out is to take a look at them. Okay. Oh, what was that one? That was AM. No, AM has options. See that? Only monthly options. AMRB. AMRB. That has no options. That's the only way to find out whether or not they have options using this platform. Okay, to find out if they have weekly options, easy enough. Go here, click on this button here, slide down to says public N/W, and then come down to the weeklies, and it tells you who out of all those companies have weekly options, and only 2 companies have weekly options. Okay, so needless to say, I did take every single one of these stocks and I did put them into the software, and the software spit them all out, and even still, there's what? 7, 20, 7, 10, 11, 32, 39, 40. Only 40 companies. Only 40 companies on this week for us to look at. And out of those 40s, only one of them was good enough to actually do. So let's put in INTC and I'll show you. Intel. There we go. Now, Intel starts the year off at 31. Within a month, she makes the low of the year somewhere around 29, 69, somewhere in that area. Over the next 4 months, she slowly moves up, hit the high of the year of 38, 33. Okay? She drops down to a trading range of 35, goes sideways for about 2 months, jumps back up that trading range of 36, 37, and then she slowly goes sideways for the rest of the year. And where we are now is 36.18. So let's go back to monitor and find out what positions we have with INTC. Now, we have 100 contracts. Very rarely will I buy 100 contracts, because that's 10,000 shares. Okay? If it goes the wrong way and I have to buy 10,000 shares of INTC, I don't mind, because Intel's a good company. It's been around for a while and they pay out their dividends. They're just fine. Okay, so anyway, we bought the 35 and a half call. So we bought 35 and we sold the 35 and a half. What does that mean? It means it's a spread. The most money I can make is 50 cents between the 35 and the 35.50. $35, 0 cents. $35, 50 cents. Any movement between there, I bought it for 35 bucks and I'm selling it for $35.50. The most profit I can make is 50 cents. That's it. That's all I can make. I can't make any more no matter what I do. Now, I recall, you may know better because if you watch the other videos, you may know what I bought it for a couple of days ago. I'm pretty sure it was somewhere around 35 cents, which is would be somewhere around a 45% profit if and only if it stays above 35.50 on Friday afternoon. So right now she's at 36.18, which is she's $1.16 into the money, which means I get three things going for me. Now the only reason I will buy a stock is if these three things are going for me, especially when it comes to the diagonal options. If the stock stays where it is, I make money. If the stock moves up, I make money. And if the stock goes down, I make money. How can you go wrong there? I try explaining this to people. If the software tells me it's going to go in a certain direction because that's the way it's always done, great, outstanding. If the 10-year chart tells me, hey, this is a great company. 10 years ago you bought it for this, now it's at this. Great, I like that too. Then we come down to the trends. Is it trending in the right direction? Where's the bottom? Where's it going to go? What does it look like it's going to do? Now, nobody can tell what it's going to do. We play what's called odds and probabilities, okay? And we're using the dividend as a precursor or as an indicator. The dividend is coming up. What has a stock done over the past 10 years when the dividend's coming up? It usually goes up. Does it mean it's going to go up? No, it does not mean that at all. The odds and probabilities say that it might, and it should, and everything looks happy. That's the best we're going to be able to do because nobody knows exactly what's going to happen tomorrow. Okay? However, it's a good company. They're paying their dividends, and they're increasing their dividends. Okay? And over the last 10 years, this is what they've done. Okay? If you don't have access to the software, join the membership. Get access to the software. Join it, look and see. Then, if everything looks good, A, B, C, and D all look good, then you buy your spread or you buy the stock. Collect the dividend, collect the run-up, whatever you want to do. I do the options. You know why? Because if the stock goes up, I make money. If the stock goes sideways or stays where it is, I make money. And if the stock goes down, I make money. How can you go wrong? The only way I can go wrong, if the stock goes down. Does it go down all the time? No. Okay, perfect example. Last week, half of my positions went down. The other half went up. I lost $3,000 last week. Fine, dandy. Can I live with it? Sure. The account's up for $40,000, which is 40%. All right, because I started out with $100,000 beginning of January, and $40,000 is 40% of $100,000. So the account is up 40% in we're in the third week of the second quarter, which is 12, 13, 14, the 15th week of the year. We have 52 weeks. Okay? Week number 15. Did I just say 15? Wait a minute. 4, 8, 12, 13, 14, 15. Yeah. Week number 15. Tomorrow is the end of week number 15, and we're already up $40,000. Last year, 52 weeks, and we only got 62% return. We're at 40% already. We're not even halfway through the year. There's a good chance. Wait a minute. There's a very good chance that we can hit last year's target by half the year. Okay? By the time the second quarter's over, we could very well surpass the 60%. Don't know. It would be nice. Okay, so that's the position we got into on Monday, which was the 17th. Okay, now let me show you the position we got in on Wednesday, because someone asked me Tuesday to show them a 1% trade so they can make 1% for the week. It's like, great, so I showed them one. And you're going to like this one because this one's cool. Lowe's, there it is. Now let's put Lowe's in, L-O-W. Now, Lowe's starts the year off at 76, goes sideways for about a month, jumps up, and trades in the $79 area for about 2 months, month and a half, 2 months on it. Jumps up again, 81 for a couple months, drop back down to the $76 area, trades for a little bit, and she continues to drop over the next couple of months to make the low of the year at 64.83. Look at the date on the low of the year, day after election. Okay, so I told you it's a pivotal point. You know, it's a date that's people are going to remember for a long time because of, you know, a lot of things happened on that date. Okay, so election day, 11/08/2016, she's at the low of the year at 64.83. She jumps up and goes sideways for a little bit in the $72 area. And then for some strange reason, March 1st, she shoots from 75 on up to 81, 82, somewhere in that area. She goes sideways for the last 2 months, where she is now at 83.29. Okay, what does that mean? At the moment, it doesn't mean anything. I'm going to isolate this a little bit more so you can show. Okay, so Tuesday, this was Monday, this was Tuesday. I was asked before we signed out on Tuesday night to find a 1% trade. I said, all right, let's scan around and see what we can find, because we couldn't do anything. All right, this is this week right here, right? I didn't want to get into any of these companies here, because that's this week. Okay, Clorox, didn't want to do them. Didn't want to do them. Didn't want to do any of them because they're building EX this week. Okay, so I want to jump on next week because we can sell off some options on some of these companies that are going EX next week and see who had a weekly option. Okay, come down here. And there we go. Lowe's, Race, AGNC, EPD, 7 of them on Thursday. Oh, Citigroup, Hasbro, MS, I don't know those. Texaco, maybe? I don't know them off the top of my head. Okay, BK and VLO. All these companies doing weeklies. I didn't want to get too involved, so I just picked the first one I could find, which was for Monday. So we picked on Lowe's. And here we go for Lowe's. Now, what was really interesting about Lowe's is, number one, it is a dividend king, which means they've increased their dividend payments every year for a minimum of 50 years. And guess what? Next year, they're most likely going to do the same thing. So if I buy it and I'm stuck with Lowe's, I don't care because they increase their dividend every year for 50 years. Is it guaranteed? No. I'm not required to tell you that, but I want to tell you so you're not disillusioned. Are they required to increase it every year? No, they are not required to. It's just that they have. And if they've done it for 50 years in a row, and to be on this prestigious list, because there's not a lot of dividend kings out there. I believe there's 17, 18, 19, 20. Somewhere, I think there's 20 of them this year. 20 companies that have paid a dividend and increased it every single year for 50 years or more. Okay, so it's not a lot of companies on there, but Lowe's is on there. And I'm pretty sure, I'm guessing that they're going to want to stay on that list. Because the main thing for a publicly owned company is to keep the shareholders happy. Pretty much, you keep going business and you keep the shareholders happy. That's the main reason for a business. All right, so that's number one. And that, my friends, is a biggie. If it's a dividend king and it's a household name, there's some dividend kings that aren't household names that nobody ever heard of. Diebold. Who's ever heard of Diebold? What was the other one? Oh, they make auto parts. Oh, I don't know. They make auto parts. Used old auto parts. They continue to make car parts for cars from last year, the year before, and the year before. Spark plugs, air filters, weird stuff. But they're a dividend king. They increase their dividend payments every year anyway. Number one, dividend king. Great. Number two, all the software is happy about Lowe's. Okay. 3, the 10-year chart for Lowe's looks great. 4, the 1-year, what do you call that? The 1-year chart didn't look that bad. I mean, it goes up, it goes down, like every other stock, up, down, up, down, up, down. It's in a nice area, and the seasonality looked good also. All right, I'll pull up the seasonality and show it to you real quick. All right, here's the seasonality for Lowe's. Okay. The blue line represents where it is at the moment. So at the beginning of the year, she was at 76, and now she's at 82. That looks great, don't it? So what does it do here normally? The red line represents 10 years worth of data. So what they do is they take last year's chart and they put it on top of the year before that, on top of the year before that, on top of the year before that, and they come out with the average. And this is what the average looks like. So where were we a couple of days ago? We were right here. And if you look very closely, there's a little bit of an up from 3 days ago, which was, what was 3 days ago? It was the 17th, wasn't it? Yeah, 17th. You can barely see it, but there it is right there. I only wanted to hold it for 3 days. So 17th, 18th, 19th. 21st and 20th, right there. So basically going sideways. I can deal with going sideways. I can, because everything else says yes. And the seasonality says it's most likely to go sideways. And worst case scenario, okay, she's going to go back up. But I'm not holding it long term. Okay, this is a very short term 3-day trade, because at the end of 3 days, the option expires. That means it's at 4:01 on Friday afternoon, the option is basically worthless. So I have to do something with it between now and 3:59 on Friday, which we'll be going over that tomorrow morning. So show you, not tomorrow morning, tomorrow around 3:30, just before the market closes, to see what we're going to do with it. Okay. So all that points into the direction in which I want to go. I wouldn't mind holding Lowe's because dividend king. All the software says it's going to look great, and if you don't have access to the software, I'm telling you, get access to the software. It's only $30. Plug in all the numbers, look at the charts. If everything says yes, then do it. Then, let's go right here. Trade LOW. Let's get back to where we were here. Back to the standard chart. There we are. Okay, this is what she looked like for the last 30 days. So the last 30 days. Basically going sideways. Okay? Support here, a little bit of support there, a little bit of support here. Where's she going to go? She's going to go up. Is it guaranteed? No, but everything points in that direction. All right. So what I did, I wanted to find a vertical. That's where you buy one option, you sell another, and then you only get the difference between one and the other. I forget which one I bought. Right here. The 81.5, 82. I bought it, I believe it was 30 cents. Anyway, I did the math, and I actually showed the math with the calculator online. So if you guys are really curious, you want to see it, go back to the other couple of days ago broadcast and watch the video. Towards the end of the video, it shows you I'm doing the math for that trade because somebody asked me to demonstrate a trade. And I demonstrated it, and I said, holy cow, those numbers look great. So I bought a bunch of them. Okay. And it just happens to be working in my favor, so that's good. It's always lovely, hey, making money, great, whatever. Okay, so I bought that one, and as long, well, let's go back to where we are. Okay. I actually bought 100 shares because I showed them a covered call. I showed them a covered call, and I showed them, what do you call it? A couple of, I showed 3 different trades. One was a covered call. One was just buy the stock, collect the dividend, which would have given you about 1% anyway. And the third one was the spread that I did, where I bought the 81.5s and I sold the 82s. Now, if you think about it, that's only a 50-cent spread. Why would I do that? Well, because options give you great amount of leverage. I paid, I think it was like 30-something cents. It was ridiculous. Or, no, I think it was 20-something cents. 28, 29 cents. Something like that. Go back at the other video and look at that. Anyway, the math came out to like 63% or 64% return. I said, oh, hell, I want to do that. I got 100 contracts. Okay, so, and look what happened to Lowe's this morning. She opened up at 82.42, and now she's at 83.29. So, is there a chance that it could go down? Yes. Okay. Could I lose money? Yes, I could. However, the odds and the probabilities are looking in my direction. If I lose, I lose. And how much am I going to lose if I lose? I'm going to lose $4,100. Okay? At this moment in time, I got $4,100 on this position. See that right there? It says buying power effect, $4,100. And my profit for today was $2,400, but my profit since I opened it is $2,200. So $2,200 is more than 50% of what money I have up for it. Okay. Now remember, tomorrow I still have more time premium. Okay, so as soon as the time premium is gone, I should hit my 60%. I could sell it first thing in the morning and take that 50% and say, yay, 50% return. But I'm going to let it play out and see what it does. All right, but 3:30 tomorrow, I'll probably take a look at it first thing in the morning. And if it's favorable, I might get out of it, take the 50% and not worry about, what's it going to do for the rest of the day. But it's 9:40 p.m. I'm going to quickly check and see if we have any questions, and then I'll be out of here. No questions. All righty. All right, so no questions. I'm out of here then. Come watch us tomorrow at 3:30 and see how that position plays out. I'm kind of curious myself. We got a little over 40%. I'm pretty sure it's like 45% for INTC, and we're at 64% for Lowe's. Lowe's was a nice one. It's only a 3-day move. I mean, a 3-day play. I'd love to be able to do, 60% for 3 days. The more the merrier. Bring them on. Okay, I'm out of here. I'll catch you guys tomorrow at 3:30, just before the market closes. If you don't have access to the software already, I'm telling you, go to the website, sign up for the membership, get access to the software. If you need help, let me know. I'll help you. I'll help you the best of my capabilities to help you get double-digit returns. You're not going to get the returns like I get because I can't do that for you. You actually have to make your decisions yourself. You're responsible for your own decisions. But the software does isolate and tell you what's doing what and when. So with that, this is James from Dividend Stock Talk. We will catch you mañana, 3:30. You guys have a great day, and I will talk.